Adams is with me here at Mines and Money from Charteris Gold and Precious Metals Fund, as well as a Premium Income Fund. Ian, nice to see you. Welcome along.
Okay, nice to be here. Thanks.
First off, your initial thoughts. 2017, how would you sum it up? You and I were chatting earlier saying this is the year base metals have come into their own.
Yeah, well, we think that we're in a big long-term bull market for all commodities, softs, hards, metals. 2016 kicked off with precious metals. And then 2017 has been a consolidation year for precious metals, but it's been a boom. The rotation has switched over, the interest has switched over to base metals, and a lot of interest in copper and nickel and zinc and those metals. So, you know, that's really the story of 2017, a rotational switch out of precious metals into base metals.
And in particular, where the Premium Income Fund's concerned, or the equity fund, Antofagasta, big
that's our
exposure
biggest holding. Yeah, we have about 8-9% of the fund in Antofagasta. We've also got the second biggest and third biggest holdings in Rio Tinto, Zinc, and BHP Billiton. So we've been playing that base metal story through the equity fund. But we think moving over to 2018, we think the focus is going to switch back to the precious metals. It feels eerily similar to December 2015. We've got some headwinds for the next couple of weeks because there's going to be some US tax loss selling in some of these gold and silver miners. So don't expect any fireworks for the next few weeks. But we think once we get through to January 2018, we think the onus is going to switch back from the base metals back to the precious metals again.
And in terms of those precious metals, your exposure there, about 2/3 silver, 1/3 gold?
Yeah, we haven't changed it. I mean, silver was the reason we outperformed so much in 2016. And we've given a little bit of the performance back in 2017 as the precious metals are consolidating. But we're still of the belief that the underlying trend in this market is up, and that the reasons for our fund outperforming in 2016 will then reappear in 2018 if our view is correct, and that silver will be a much better if the whole precious metal complex moves up, silver will move up much more than gold or platinum.
And in terms of these companies that you're investing in, they're all producers. You don't invest in explorers or developers?
Yeah, we go for the mid-tier space only. So minimum really $400 or $500 million. Might be one or two exceptions, but by and large, minimum $500 million, maximum $2.5–3 billion, maybe with one or two exceptions. We don't like the really big companies like Barrick and Goldcorp because they're all on declining production profiles, every single one of them. The only sort of big, semi-big company we own is Agnico Eagle, which is on a rising production profile. And we don't really like the exploration shares because we like to buy companies with positive cash flow that are producing at the moment, rather than the sort of manana gem tomorrow of the. We just, so we don't do the really small ones and we don't do the really big ones.
And any particular geographies?
Well, because a lot of the fund is in silver, you veer towards Mexico and Latin America. So we've got big country exposure to Mexico, which we felt 100% okay with pre-Trump and all these attempts to dismantle NAFTA. All the time you had NAFTA, we thought, oh, this is great. You got sort of Mexican cost structure inside North American free trade arrangement. Trump has threatened to tear apart NAFTA, but so far he hasn't followed through.
Has it made you slightly nervous though?
Not really, because we don't think he will dismantle it. He's a lot of the thing with Trump is a lot of bluster and not much follow through. So
there's been little change as far as the weighting.
We haven't changed anything.
And no plans to?
No, because we think if we weren't reasonably confident that 2018 was going to mirror 2016. When I say mirror, I don't mean a really sharp, explosive move spread over 4 or 5 months. We're looking for something this time more gradual, but more lasting a year or two, but more sustained in the end. So we're looking for more of a sustained move, not such a huge spike we had that we saw in the first half of 2016. But if that wasn't our base view, we wouldn't have the portfolio constructed the way they have. We've been quite, so we've ridden out this consolidation and we've no real desire to change it.
Because of course back in 2016 you were looking at returns of around 130 odd, 133%, weren't you? And so you'd expect, all going well, to look at similar numbers for 2018? 2018 next year? Hard to
No.
predict, but
If it goes according to plan, it's not impossible that it will exceed that, because in 2016 the fund actually went up 200% in 4 months,
right.
and then it spent the rest of and then it spent the rest of the back half of 2016 actually going down, and it still ended up 135% for the year as a whole. So all the return of the fund was condensed into the first 4-5 months of the year, and then the consolidation phase set in, which then carried through to 2017. What we think in 2018, it will be less explosive, but more sustained.
And of course, a word on many people's lips at the moment, and will continue to be so next year, is Brexit.
Yeah.
Is that the knock-ons there affecting you at all?
No. I mean,
because of course
we've got Mr. Farage speaking at 12:30.
Yes, we do.
I'm a member of UKIP, so I think it's absolutely zero. The only thing to fear about Brexit is if we make too many concessions to the EU as a price for staying in the single market. I think, quite honestly, this country is the 6th or 7th biggest economy in the world. There's a big wide world out there. And as far as the mining space is concerned, especially the ones in our equity fund, any adjustment to the UK economy will be instantly through the exchange rate. So if the market deems a no deal, for example, is bearish, sterling drops 10%. What does that do? It puts 10% on the top line revenue of all the mining companies in our equity fund. So on a political front, I don't think there's anything to be frightened about. And having an equity fund full of overseas earners, well, it would just make them go up more.
Really good to get your thoughts here.
Okay.
Thanks very
All right.
much.
Okay, lovely to meet you.